Imagine I'm an SME. First, it is a task for me to open a bank account. Once I've opened that account, to get a loan is a bigger task. And once I have that loan, it ends up being a burden and not really a blessing for me. Welcome to yet another episode of ABTV's Crossfire Debates, and on today's show, we will be discussing if banks are really supporting SMEs in this region or not.
This, well-represented SME leader, this family man of 15 years in Dubai, has been forced to flee the country.
Such kind of anecdotes, whether founded or unfounded, I don't know, but I keep listening to. Here are the facts.
Welcome back to the show. So I've got a question for the audience here. How many of y'all think that banks, especially in this region, are really supporting and helping SMEs? Show of hands, please. Okay, that's actually a strong number. Well, thank you so much for joining us. In the studios right now, we have Steve Cronin from Debt Simple Savings and we have Rohit Garg from Mashreq Bank. So before we actually get into the debate, let me just pull this out for you. 94% of all registered businesses in the UAE are SMEs, but banks lending to the sector stood at 3.85% in 2016. Rohit, obviously my question to you right now is, how can you say that banks are really helping and supporting SMEs?
Shruti, thank you for having me here. When you look at this statistic in isolation, it does portray a picture as if the banks are not supporting the SMEs. But if you look at why the bank lending to the SME segment is not at a level where it should be, you will find out if you do another survey, and those surveys have been done, you'll see that there are 5 major issues that contribute to this. The first one being lack of organized financial record for the SME. The second one being lack of collateral. Third, lack of coherent business plan for the longer time, right? Fourth, predictability of the business, longevity of the business, right? And fifth is that in isolation, this number also includes the infrastructure lending. So if you take the infrastructure lending out, especially in countries which are growing the infrastructure at a rapid pace, the infrastructure lending takes a bulk of lending, right, which is also done by corporates. So if you've got a Dubai Metro being built, it is contractors who are building this Dubai Metro, which is very capital intensive, etc. Having said that, there is no doubt that the lending to the SME segment could be improved. Yeah, but this global statistic is compounded by one more issue in a country like UAE, which is that it's a transient country and many people come here for a short while. Mm-hmm. So there is no organized credit history that we have to rely upon while lending. And more often than not, if the SME gets into a difficulty, rather than work with the bank, they just take the next plane out.
Right, just going back to the transient point and how people stay here for shorter terms, there's also a whole structural problem here, because I know in South Africa this is happening where short-term loans are being provided to SMEs, but over here those provisions aren't really there. But we'll get to that in just a bit. But let me come to you right now, and I think we've gotten a little ahead of ourselves here. I think at this point we need to define what SMEs or small businesses are in terms of numbers, figures, etc. So Steve, let us hear your definition.
Okay, so small and medium enterprises, that's SMEs. The UAE has actually come up with a specific definition that's a little bit complicated based on industry. So whether you're in trading, whether you're in services, whether you're in industry, then there's a different definition for each segment, which does add to the complexity somewhat. But essentially what you're talking about is micro businesses. You might have 1 to 10 employees. You might have a turnover of, say, less than 50 million dirhams. And then for small and medium businesses, that goes all the way up to maybe 200 employees and 250 million dirhams, which is actually quite big. If you look at SME definitions in the rest of the world, we're typically talking about $10 million turnover.
Right.
And my fear is that when the banks are saying they are supporting SMEs, they're more supporting the M in there, the mid caps, when the S is completely neglected, I would say. Now, why is this? Why is this picture so bad? SME segment is problematic across the world. It's always caused problems, and there's been scandals in the UK, and there's been scandals all over the place. But I think in talking to my entrepreneurial friends, who frankly were too scared to come here today and to actually talk about this.
Why is that?
Well, because they fear that their relationship managers are going to see this and literally have another reason to chop off their trade finance facilities or to close their account. And this fear is very real. And I think actually the problems with SME banking are fear-based. The small businesses are afraid of their clients not paying them, which is a very real fear. And they're also afraid of the banks chopping access to facilities. They're also scared of their checks bouncing, which used to be a criminal offence here.
Sorry, but like by saying that, you're sort of digging your own grave, aren't you? Now, if the SMEs are afraid that their clients are not paying them, so isn't that the same fear that banks would have? The banks are afraid that the SMEs are not going to pay them because, well, NPL is a fact right now.
Yeah, so this is a very real fear. And absolutely, we have to find a way for banks to support the SME sector, knowing that NPLs come from the SME sector. So if the answer is are banks supporting SMEs? No, because they're scared of NPLs. That's valid, but it doesn't mean that they are supporting SMEs. So I think the final part of the puzzle is the banks, and they are worried about the burdens imposed by the central bank just for account opening and KYC. Those have costs, very real costs. They're also worried about NPLs because those non-performing loans could literally eat their balance sheet.
The SMEs in the region are also to be blamed essentially with the whole structure here. So I've got stats to support that. So only 50% of business units maintain audited financial statements. Only 25% had dedicated HR employees, and 26% could provide training to their employees. So now these are again stats from the whole SME sphere of it. And doesn't this essentially show a lack of financial structure and discipline then? And could that be one of the reasons why you don't think that segment is credible enough for you to provide the loan?
Banks do something very simple, right? We borrow cheap and we lend dear. Now, what is it that you're looking for when you put your money in the bank? You get a 2-3% and interest rates are low here. So you get that 3-4% interest rate. Now, if you look at 2016-17, the default rate or non-performing loans went up to excess of 30%. How can any bank borrow money from the depositor, give it out to the SMEs to get 30% default rate?
Yeah.
Now, there's a fiduciary responsibility of the bank that you've got to pay all your depositors back. And don't forget that I have not even talked about the cost. So it's not that banks are unwilling to lend, but you have to be bankable.
Right.
If you've given your money to me personally, would you rather that I give it out indiscriminately, or would you rather that I give it out in a very, very credible manner with a lot of due diligence, and your assumption is that you will get your money back?
I'm going to come to you right now. The structure, essentially, when it comes to financial discipline, financial structure, do you think that is missing from the SME community here?
I think there has been a history of SMEs maybe being a bit loose with their financials because they're busy getting on with other things. There's complexity. You've been able to get away with not having properly audited financials. Absolutely, you can completely insist on SMEs improving, and actually the banks have a very useful role to play in educating them and guiding them towards having better financial statements. One of the problems that the Dubai Chamber's white paper on this found is that there wasn't enough transparency from the banks, there wasn't enough guidance from the banks, and what was actually needed in terms of business plans, in terms of statements, in terms of financials. And there probably wasn't adequate training either. So yes, you can blame the SMEs and you can draw the drawbridge up, but really the onus is on the banks to help this. Now, I think
Do you agree with that? I have to ask you.
See, there again, I agree partially because as the financial institution which is leading the financial system of the country, you do have a responsibility to ensure that the small and medium businesses are supported. How do you support? If you put it in a very narrow definition of only financing, then no. But broadly, yes, there is a responsibility that the
One
banks
key
have.
aspect, like you mentioned, transparency. Is that transparency something that you provide in education and training, something you provide to the SMEs? They require it.
Yes, I think that's a very good point. I don't think it's been to the level that it should be, but that's changing because there's a lot of digital account opening. There's a lot of digital play which is coming in, and that's the beauty about doing things digitally is that it's simple, convenient, and there's no entropy of information.
Right. Of course. So digitization is going to guarantee some level of transparency. But before that, I know we're talking about loans, we're talking about once the SME is in the system. But one of the major problems which was found by the DCCI report was 65% of the 250 SMEs polled found setting up a company bank account a struggle. So they haven't even entered the system. They're not getting that leeway. Second point, 50% of SME trading finance applications are rejected compared with just 7% of corporate applications. So these are two very disturbing statistics, if I may actually say that. So why is that happening? Why are banks not even accepting SMEs? I mean, loans is probably the third or fourth step then.
Yes, so here I allude back to what Steve mentioned earlier, which is that there is a set of requirements that the central bank mandates for any account opening, which includes having a valid trade license, having the capital, providing identity and address documents of all ultimate beneficial owners. And should you have that, then the bank has to open the account or should be opening the account. The issue is more around what's the experience like? Is it uniform? Is the information requirement conveyed to the SME in a proper manner? Is he kept informed when the account opening is happening? I think the answer to all these 3-4 questions was that thus far it was not. Again, I'll come back to the digital, if you allow me to finish. Again, if you get to a digital account opening, that solves all the problem because you're not dependent on how good the salesperson or the relationship manager is. You can log on to the website, you have all the information, you can submit your application digitally, you can track it, and you know at any point in time what is required. It's quite transparent. The second thing that you're talking about, trade finance is actually backed by credit lines. So if you require a funded trade finance line, then you need credit. So it comes back to the first point, which is if you have credit lines, you'll have access to trade finance facility.
All right. What do you have to say about this, Steve? Do you think it is difficult for SMEs to get into or put their foot on the door before getting into a bank?
Look, the complaint 5 years ago used to be, I can't get funding for my SME. Now the complaint, as disturbingly as you pointed out, is I cannot open an account. And I talk to a lot of entrepreneurs, and not just entrepreneurs with startups, I talk to a lot of SME business owners, like close to 10 million turnover and above. And these people are saying, I cannot open a bank account. It's almost unbelievable. And really, it's as if a bank account is a privilege rather than a right. What we need to see is we need to see all the different parties working together, including the central bank and the government. Because let's face it, the government wants the SME sector to thrive. So that has to be the starting point. And then we have to say, well, let's look at what's happening in the UK with Tide, for example. So it's a digital mobile bank, SMEs. It charges no fees, no monthly fees. You can open your account in about 5 minutes, and they charge £1 for withdrawing money from an ATM and 20p for doing a transfer. So that is the end goal. So rather than us saying, well, this is where we are at the moment, how do we make it 10% better with our new digital bank? And I would say there, please, it's great to see these new digital banks coming from the existing banks. But I would say, please don't just stick a battery on a camel and call it a Tesla. Yeah. Please actually make this an innovative new bank that doesn't just have the same credit risk systems underneath, it doesn't just have the same account systems underneath. The power of technology is real and we can use it. But at the moment, all of my entrepreneur friends are saying it's a horrific experience. The Dubai Chamber said it takes 1 month, 2 months, 3 months to open an account. How are you doing any business for this?
Banks are still businesses. I mean, there is no denying that, especially with the number of private banks we have here, especially with what we discussed a little bit earlier about NPL, the non-performing loans, which soared from 2.5% of total loans, not just SME, this is again the total ambit, in 2008 to 7.5% by the end of 2010. Although the NPL ratio was cut to 6.4% by 2016, it went back up to 6.7%. So non-performing loans just in the total banking sector has gone up and has been increasing, especially with the market conditions, etc. And like he mentioned just a little bit earlier about it being higher, 30% is what you said for
Upwards
SMEs?
of 30% in
Around
2016.
30%, of course. So now how do you expect them to function? What is the security that SMEs can give to the banks?
So what the DCCI report highlighted was a lack of SME expertise within the banks, particularly in risk management. This isn't a problem that's only for the UAE. There are plenty of places. Africa, even in the UK, there's a lot of data out there, and you can apply very sophisticated credit risk models to look at this. With the introduction of VAT, you can actually see all of people's transactions. So you know that people aren't faking this stuff because you can see every single transaction pretty much. And now with the new law preventing criminalization from bouncing checks, it means people are less likely to flee the country. I think one problem where banks have brought it on themselves is I've seen cases where they've said, we're going to close your facility, that the SME owner has said, please give us a payment holiday because our main client, with 70% of our business, has refused to pay us. And the bank has refused to give them a payment holiday and in fact cashed their security check. And this well-represented SME leader, this family man of 15 years in Dubai, has been forced to flee the country. Whereas, had the bank said, we will work with you on this, or had there been some kind of government credit guarantee, which I know is coming in, then maybe they could have given him a payment holiday for 3 months and worked something out. Because this is a serious businessman. He's not a con artist.
Such kind of anecdotes, whether founded or unfounded, I don't know, but I keep listening to. Here are the facts. The fact of the matter is that no bank tries to run a business into the ground because you're not going to get your money back. And that's not what a bank is supposed to do. When the NPL soared to about 30%, there was a mechanism that was worked out by the UBF. And using that modus operandi, we helped restructure loans for many businesses. However, the fact that checks are criminalized is not banks doing. Right? So let's not sort of demonize banks for nothing. This is not banks doing that. The bankruptcy law, while there, has not been very effective thus far, and I think they're making some changes. You also have other players in the ecosystem. So you also have suppliers who are not paid. Right? The banks don't control the suppliers if they go and bank the check. Third thing, or the last thing, is that nobody waits for somebody to bank the check and then flee. Right? People take the plane out and then call and say that, look, I'm already out. Can you give me a 70% haircut on what you've given? How do you expect the banks to work with that? Lastly, there's no credit system in the world, Africa included, where I worked extensively, which can detect fraud risk. Because what we're talking about, Skip, is not credit risk, it's fraud risk. So if your intention is to defraud the banking system, right, that's called a fraud. But even unintentionally, if you've gone out of the country and you're saying that, look, I can't come back because of whatever reason, and can you just waive my loan off? That is fraud, pure and simple. Now, I may have sympathy for such cases as an individual, but as a financing institution, when you give out money, you expect the money back. Because, hey, it's not the bank's money. There's depositors, it's your money and money from all of you. You're not going to forgive the debt just because, look, hey, the SME ran away, so the bank supported SMEs. Let's just give our money away. So I'd like to ask you, which of you as a depositor would forgive that deposit saying that, look, it's a good bank, it lent to SME, SME defaulted, so what can we do?
Right. Rohit, just on the back of that, as a layman, I'm going a little off topic here, but do you not think there is an active promotion of the credit culture here in this region, which is something that we've seen actively once you start a business, once you open an account? There is a promotion of that essentially, isn't there?
When you look at SME segment, there have been a huge amount of building blocks that have come through. The credit bureau has been live for almost 4 to 5 years and has got pretty reasonable quality data. VAT has been active since last year, and VAT statements are a great source of actually corroborating financial statements, which was not the case earlier. You've also got a lot of SMEs which are borrowing in a very responsible manner. They have identified source of repayment, they have a contract with a good entity, and the paymaster's got good credibility. You will get financing.
Again, I'm going to ask you this, Steve, but let me just pull this out for you first. So the 2 billion dirham Khalifa Fund offers low interest loans or seed capital to new and young businesses. EDB in February announced the launch of the 100 million credit guarantee scheme. So it's basically EDB providing guarantees to other banks to support SMEs. So these are things that are happening, and of course, what Mashreq is doing with the SMEs to support SMEs. So all of this is happening. Do you think it is showing a tangible impact or a tangible support to the SMEs?
So this is a great step forward. I think, look, 100 million dirhams is a bit of a drop in the ocean, really, when it comes to the SME financing, but it's a starting point, and we should be grateful. Any 1% improvement in any direction from any of the banks, the central banks, the funds, is definitely to be applauded. But things can progress a lot faster now, and I think they do need to progress faster, especially because there may possibly be a global recession on the horizon. Not saying there will be, but there might be, in which case things are going to get tough, and this structure is going to get tested. But I think what concerns me the most is that entrepreneurs are struggling just to open a bank account. Right? The lending is almost, a few steps down the path. But if you cannot open a bank account, then the whole system gets gridlocked. And I think it's very important to be able to open these accounts and to encourage entrepreneurs to do this.
But do you think we should just rely, or SMEs for that matter, should just rely on banks for the funding then?
I think the message for the banks and for the initial startups is you don't need a loan to start up a company. You need a good idea, you need good execution, you need good work. We will work with you. We'll try and reduce the KYC burden. When we say we'll open an account in 20 minutes, it will actually take 20 minutes rather than 1 month. I think that's where we need to head, and that's a great stepping stone.
So I want to know what exactly Mashreq is doing right now. I know there is an SME initiative that you have come up with. So is that on the lines of what Steve just suggested?
Well, for starters, it's not a camel with a battery, and we don't call it Tesla. So this came out of the study that has been referred to repeatedly today, where a lot of SMEs felt that the experience was not homogeneous. How quickly you got the account was dependent on who you were interacting with. If you got a good RM, it will open fast, otherwise not. They were not very clear what the documentation was, and transparency was missing. So NeoBiz from Mashreq is an end-to-end digital banking proposition where you can open the account online or on your mobile app. You can submit all your documentation. It takes about 20 minutes to sign up, and you can get the account. Our promise is within 3 days, the account will be open. And everything that you do is online.
Right.
Now, globally, the studies around digital is that if you move to digital, the costs are down by about 56% or so, right? So everything that you will get on digital will be far cheaper than what you would get in a conventional bank.
That's essentially solving two of the main problems. One is accessibility and second is transparency. Two problems we address. But is that the ultimate solution? Do you think it is going to be something that SMEs would want to approach?
Yes, I think they'll definitely want it. I think what was highlighted in the Dubai Chamber report is that the reality is sometimes different to what the banks say on their websites. So I absolutely 100% applaud this initiative. I just urge that there's a lot of work going on underneath, and it's true digital transformation within the constraints set by central bank and anti-money laundering regulations, etc., to actually really make this a difference. And that if it says on the website, we will open an account for you in 3 days, that it is 3 days and it's not a month, that if it does give you access to Forex, then it does. And there may also be stepping stones along the way that some people, people just want to do business. Maybe if you just give them a bank account with a debit card and or maybe even a tiny facility of 5,000 dirhams or something like that, or just the ability to make international payments, that may just be enough. And it may be that the central bank needs to say, well, there's different levels of money laundering risk, and therefore we will have different levels of KYC. And to open an account, very basic account, will require not minimal, but a reduced amount of information. And that may be checked at the enterprise setup stage. We all need to have a trade license.
Yeah.
There's quite a lot of information that you get there. You have to hand over your Emirates ID card, all these things. Mm-hmm. Once you've had that, well, a lot of the checks should be in place. And then that should be your passport to getting a very basic account. Yes, if you want trade finance. Yes, if you want to have huge flows of money going through your account, then you should be subject to more scrutiny. But you've already opened your account and there are safeguards in place so that the whole thing is just not so slow and gumming up the entire SME system.
I think bureaucracy is a whole other conversation we need to address, not just in the banking or SME sector, all across the board. But you mentioned digitization. I don't think any conversation is complete without tech digitization or any of that for that matter right now. So the fintech sector is today estimated at $2 billion and is expected to see annual growth of 125 million up to 2022. Do you think now, from everything that we've discussed, this is literally our last point, do you think fintech SMEs could then be a solution? Because again, fintech facilitates and guarantees transparency, and also it sort of removes the element of going to the banks to take their support. So what if SMEs itself do that job for their fellow SMEs?
Yes, absolutely, if they can. And that may take the pressure off some of these banks who don't really want to lend to the SMEs to say, oh, okay, well, we're concentrating on the larger corporates. Mm-hmm. And you, as the hungry SME fintech startup, will take on that risk. As long as they are supported adequately by the banks and by the central bank, then yes. We've seen that happening in the UK, where Tide has come up and really dominates the SME market now.
Yeah.
Barclays have tried to do the same thing and not really made much progress. And so these people who are entrepreneurs, who know what it's like to be a startup and know the pain points of SME banking, they can come. I would urge the banks to cooperate with the fintech companies, and maybe there is a joint solution there together. The fintech companies still need the funding capabilities of the banks. They still need the infrastructure of the banks, mm-hmm. but they bring all this dynamism and new ideas and true deep technology expertise and innovation. I would encourage them to work together.
Yeah, probably it's a complete integration that we need at this point, right? Not just SMEs and banks. It's probably banks also. Private-public partnerships is more of what we need to see. Credit bureau, we have one that has been running for a long time. We need more of those credit bureaus. But thanks so much for this discussion. Unfortunately, we're running short on time, but we do have time for audience questions. So does anybody have a question for our speakers here?
So my question to both Steve and Rohit is regarding innovation. The focus for the country, the region, is on innovative solutions. Innovation means there's going to be a risk, obviously, right? And it will also need investment. And how can we attract innovators to this region if there's not sufficient financial support or the infrastructure support for supporting innovation? If we understand innovation hubs and others are coming up, but I think banks are so in the right position to help. So firstly, I'd like to ask you how you as a bank are gearing up for this, both innovation online and offline and brick and mortar business.
I think there's a lot of support which is available for innovators from the government. And which includes company setup, which includes support on visa. And if you've got a good business plan, if you've got a setup which is going, there's plenty of capital available. That's not really in the ambit of SME banking, but there's a lot of startup capital which is available for such entities. And I think innovation is thriving given the size of the country and where it is. There's a lot of focus which is happening. There's a Minister of Artificial Intelligence. So this place is really buzzing now. I think it's about 5 to 10 years late, but now there's a lot of work happening.
But how does it go from being beyond just buzzwords, essentially, in this region? Like you mentioned innovation right now, but I think every single entity, organization, industry in this region, they're throwing words like digital transformation, AI, VR, XR, etc. But how do you bridge that gap between it being a buzzword to its actual implementation?
No, I think it's the opposite. If you look at some of the unicorns which are homegrown, if you look at Careem, it just got bought out by Uber, right? If you look at so many other companies, if you look at Souk, Amazon bought it out just to sort of establish a foothold here. If you look at some of the companies like in the real estate segment, check out their customer support programs. I think they're using a lot of technology which is enabling customer service.
So innovation is a means to an end, right? You can't say we have achieved 60% innovation. It doesn't mean anything. You need targets, and then those targets will force you to harness innovation. So if the target is 60% of small businesses have been able to open a bank account within 3 days, and that's a government mandated target, things will change. That is what we need.
Right, where innovation is actually an enabler, facilitator, catalyst, and not the ultimate solution.
Absolutely, because then, whether it's the threat of fines or just simply, pressure to achieve these targets, banks will be willing to invest, they'll be willing to buy fintech companies, they'll be willing to talk to fintech companies, they'll be willing to throw the old school banking playbook out of the window and actually innovate. And I think that's what we need.
I think it's not a question of buying or, financing fintech. It's also a question of partnerships. I think globally, fintech is being driven by partnership with banks, right? So I mentioned NeoBiz. What I did not mention is we also partnered with 3-4 other entities to bring value-added solutions to the SME that onboards. So if you need an accounting platform, for example, you can sign up there and then, and you get some discounts, etc., which we've negotiated on behalf of the SME. So the world is moving towards open banking, it's moving towards partnerships, it's moving towards more compliant entities, it's moving towards more transparency. This place is no exception. However, it's also, like I said, it's moving towards more compliance. So I think we've got to move away from cliches, we've got to move away from anecdotes to reality, to being compliant, and to benefit from all the innovation which is happening around. I think the banks are willing to play in the space. The digitization, the NeoBiz kind of entities are examples of that. And I think everyone needs to sort of come to the party.
I agree, banks are willing to play, but probably they're just willing to play safe at this point. All right, so I think now I need to ask the audience a question again that I asked in the beginning. Let's see if your minds have changed after this 20-30-minute conversation we've had. Right now, how many of y'all think that banks are really supporting and helping SMEs in this region? Show of hands, please. I've seen a few hands go down this time. Congratulations, Steve.
Oh, it's not a competition.
But thank you so much for joining us, and thank you for coming into the studios. Thank you for watching ABTV's Crossfire Debate. We will be back again next week. Are banks really supporting SMEs in this region? Let us know what you think in the comments below. And of course, don't forget to hit that subscribe button and like, follow, and comment on this video.